So hi everybody, I want to say hello to everyone and welcome you to this webinar reporting on the Sustainable Development Goals. What do investors need to know? We have an hour to spend with each other and we're very privileged to have a great panel, which I will introduce to you in a minute. My name is Carolien van Wersch. I will be your moderator today for the next hour or so. I work at Ariel as a Director of Business Development. Before we head into the discussion, I want to ensure you that we will share the recording of this webinar with all the participants, and on request, we can also share the slides with you. During the webinar, we will have 2 polls because we're also very interested to get some insights. So please vote and remember to close the box afterwards. But I'll tell you again as soon as it pops up. As said, we're very privileged to have a great panel. We'll start off with Heike Reichelt, who works at the World Bank. After that, we'll give the floor to Martina McPherson, who works as the head of sustainable indices at S&P. Nando van Kleeff will then go forward, and he is working at MN. After that, Geoffrey from Culture Capital will get the floor, and we'll end with Ariel Meyerstein, who works at Citi. We'll have a hashtag today as well, so if you hear something interesting, please share. It's hashtag SDG webinar. Next slide. So we have about 520 participants who registered for this webinar. I think what's interesting to see in this slide is the diversity of the groups who are in this call, participating in this conversation. I think it shows the interest that the Sustainable Development Goals and investing in it, there's a high interest in it. One of the remarkable things we found out during the Sustainable Brands conference recently is that there was a study done by Frost and Sullivan and GlobeScan on behalf of CSR Europe, and it actually showed that over 50% of top management is very aware and involved in the Sustainable Development Goals, which is a great number. The worry is underneath it, as only a little bit over 10% of middle management actually is aware of the Sustainable Development Goals. One of the things that probably will be addressed during this webinar as well. We've used our Datamaran platform to show the number of reports that mention or report on the Sustainable Development Goals, to give you some insight. And as you can see, there's an exponential growth. Before 2015, of course, there was almost nothing mentioned on the Sustainable Development Goals, as they at that point in time were not created yet. But if you look for, we've also looked a little bit forward, and what we see is that in 2017, the percentage is increasing again. So I want to hand over to our panelists, and I want to give the floor to Heike as our first speaker.
Thanks so much. Hello, everyone. Thanks very much for inviting me to participate in this webinar. It's a very timely topic, and it's my pleasure to start us off and share a bit about the World Bank. So we're hearing that investors are increasingly looking for ways to earn more than a short-term financial return with their money. They still want the financial return, but they're looking for long-term value and want to make their investment work for society. And we hear that some investors are starting to use the SDGs as a framework to report back to their stakeholders. And to do that, they need to know how companies contribute to the SDGs. I work at the World Bank Treasury in the group that issues bonds in the capital markets to raise funds for our lending activities that support sustainable development. So all bond proceeds are used for projects that support the SDGs. So we'll hear more about the SDGs on this webinar, but basically they're a set of 17 goals that were adopted in 2015 with the aim of ending poverty, protecting the planet, and ensuring that everyone benefits from prosperity. And one thing that was different about these goals compared to previous goals is that it was accepted that everyone needs to work towards these goals, not just governments or the private sector, but also the private sector. So not just governments or the public sector, but also the private sector and all companies and investors and all individuals as well. So that's something that's quite different about this set of goals. And as I said, we'll hear more about that later. Some of you may already know the World Bank. The official name is International Bank for Reconstruction and Development, or IBRD, and we were set up in 1944. We're owned by 189 countries, and our shareholders are also our clients. So you can think of us kind of like a development cooperative. And we work towards the World Bank Group's twin goals, which are to end extreme poverty and promote shared prosperity. And we raise money in the capital markets. We issue about $50 to $60 billion in bonds per year. And we work with governments of our member countries to finance projects in many sectors, such as education, health, and sustainable infrastructure. So why do investors buy our bonds? The main reasons are safety and purpose. So our bonds are rated AAA based on our strong balance sheet, support from our shareholders, and our conservative financial policies. And most of our bonds that we offer are in US dollars, but we also issue bonds in many different currencies and structures and maturities. And investors who buy our bonds receive a financial return, and they contribute to the positive impact of the projects they help finance. We like to say that investors earn a financial return and also a social return. And as I mentioned, we see that investors are increasingly interested in the positive social environmental impact of their investments. So they're looking for a closer connection to the purpose of their investment. And to respond to this, we've been focusing more on transparent impact reporting for investors so they can find out more about what they're supporting when they buy our bonds. So we summarize and report more on purpose and impact of our projects. And we have extensive project documentation on our website and several videos that explain projects to investors. Just going to mention two examples. A health project that the World Bank financed in Panama had the following purpose. We worked with the government to ensure that rural communities that were far away from health centers received better health care. And through the program, more than 200,000 people in almost 50 rural communities had much better access to healthcare services. Another project in Colombia focused on safe and affordable public transportation. But there's many more projects. Next slide, please. So I mentioned that all our bonds support the SDGs, but we recently launched a product that raises awareness for the SDGs and to the fact that the private sector also has a huge role to play. Together with BNP Paribas, we developed a product that links the performance of bonds to an index that consists of companies that have products and services that are aligned to one or more of the SDGs. So it's a World Bank bond. Proceeds are used for sustainable development, but investors also benefit from the financial performance of the companies that were selected for the index. And the investors that purchased the bonds are mentioned at the bottom of the slide. They purchased them for financial reasons, but also to show that they're focused on the SDGs in their investment frameworks. So I can talk a little bit more about this product later in the Q&A if there's time, and feel free to contact me after the webinar if you have any questions. Thank you.
Thank you. Thank you, Heike. Very interesting. We'll go over to Martina.
Hi, everybody. My name is Martina McPherson, and I'm the Global Head of ESG Indices Product Management at S&P Dow Jones Indices. Delighted to be on this call for multiple reasons. We're discussing the SDG frameworks and alignment of goals very shortly. Just to let you know that this is an ongoing effort that stretches a broad variety of the activities that I'm involved with, from the Global Network for Sustainable Financial Markets, where I'm sitting on the board, the Global Thinkers Forum, as well as multiple ESG and green finance working groups that are looking at tackling the issues around, SDGs, first of all themes, but also implementation. And I'm also doing this in my day-to-day other job as part of the University of Zurich and Henley Business School's efforts to align SDG frameworks with the sustainable finance activities. And I'm part of that as well. To go to slide number 1, which showcases actually the alignment of global goals across the investment value chain in the context of SDGs and long-term value creation. What you can see is actually that in 2011, the UN Secretary General challenged the international community on the implementation of sustainable development goals, which ultimately led to the development of these goals and the launch of these goals in 2015. He actually called out for, more alignment and a new generation of sustainable development goals to pick up where the Millennium Development Goals actually left off. And he asked, the broader community, so that's actually public policy makers, corporations, and investors, to agree on the means to achieve these goals. So what's happened since then? We have seen more cross-border alignment of, SDG activities across the value chain. And it's fair to say that the Paris Agreement and other joint border initiatives have actually set the right scene for what we call a new paradigm, especially in the context of climate and development finance. So that's actually led to an increasing amount of public-private partnerships, that play a key role in underpinning commercially viable, sustainable, and scalable solutions, often referred to as blended finance. And we have also seen multinational activities that are increasingly leading to the convergence of goals across, the stakeholder groups that you can see mapped out here. And it's interesting to see, I'm focusing a bit on two groups here. First of all, corporations. They're already taking action. We will hear about that a bit later on, and SDG leadership. For instance, there were recent industry reports by Pricewaterhouse that actually assessed the market and found that a large majority of global businesses are already planning or using to engage on the SDGs with their broader communities. So they're either using the SDGs as a lens for corporate activities, mapping the value chain to identify areas of either negative or positive impacts, or using the SDGs as a means for collaborating with partners to solve common problems on a shared value basis. And no surprises here. Since then, actually, since 2015, investors have actually followed closely suit. So a recent study by Share Action found that 95% of institutional investors plan to engage with investee companies about SDG issues. They're also, outlining a couple of case studies here detailing how investors across the globe are actually undertaking approaches towards SDG analysis and implementation. And it's fair to say that the Dutch and Nordic investors, and I'm glad we have someone on this call here, actually leading the way in relation to SDG mapping, standardization, and blended finance efforts with dedicated SDG coalitions and a Dutch SDG investing agenda. I'm sure we will hear about that a bit later on as well, which actually tries to build cross-border relationships again between investors and public policymakers, so between the DNB and the Dutch government, for instance. Key challenges remain, especially around metrics and benchmarks that are relevant for sustainable development and long-term value creation. This slide actually provides a bit of a spectrum of where the market is at and how we actually can build more metrics and alignment around environmental and social footprints, green finance and sustainable finance issues, and how that actually translates from an SDG perspective into tangible themes or metrics. So what's actually happened here, and I promised Heike to provide a bit of an overview, over the last couple of years, we have seen the introduction of the SDGs, Sustainable Development Goals. So these are 17 social, environmental, and economic goals that frame the global agenda for sustainable development. As mentioned, they were actually adopted by the international community in September 2015, and they now cover a diverse range of issues, including gender equality, sustainable cities, and we'll hear more about that later on as well, access to clean water, decent work, and economic growth, as well as good governance. The aim is really for all countries to achieve the goals and their targets by 2030. So very often that's referred to as the Agenda 2030, and they set the world on a path towards sustainable development. So it's important to say, the SDGs are universal. They apply to all countries and actors, and they recognize that businesses and investors must play a pivotal role in their achievement. So major agreements reached in 2015, for instance, in Addis Ababa, was the financing for development, and then ultimately the Paris Agreement for climate finance in 2016, and most recently in the context of the SDGs, the UN has closely collaborated or is collaborating with a broad range of investors in the context of a dedicated UN SDG Finance Lab to further strengthen the SDG framework and the alignment of initiatives across the investment value chain. So what does it ultimately mean? You know, we see that the United Nations has estimated that annual costs to meet the SDGs globally are between 5 to 7 trillion US dollars over the next 12 to 15 years. But there's actually a funding gap, an annual funding gap of roughly 2.5 trillion, and that needs to be filled. And that's predominantly ideally coming from private investors. So what's still needed, and I mentioned that, is, you know, there is actually still a bit of a lack of meaningful metrics for companies and investors to use, and literally therefore also a lack of measurable data around the SDGs. But what we have seen here is that especially over the last month, there has been an increasing effort around clarity and transparency around the goals, relevant targets and synergies, even investment standards. And you might have seen in 2017, UNEP launched actually the positive impact principles that will help provide guidance for financiers and investors to analyze, monitor, and disclose the ESG impacts of financial products and services that they deliver, and ultimately provide further alignment with the SDG goals. Also, what we have seen in 2017 in particular, Heike mentioned it, more investable indices that are coming to market and that are making actually the SDG an investment reality. So we have at S&P Dow Jones Indices launched multiple thematic indices, predominantly on the environmental, but increasingly in the sustainable finance context. And we are also currently now in the process of evaluating the opportunity of an SDG metrics linked index, which utilizes, you know, the S&P 1200 global equity universe and would weight stocks based on that SDG materiality matrix in accordance with best corporate practices towards meeting actually the SDG goals. So also ultimately we are looking at a new range of sustainability indices which can capture ESG momentum and impact at a constituent level over the course of multiple equity cycles. So meanwhile, you know, we're seeing something else happening, and I just wanted to refer to this. We are seeing that investors are moving ahead and are aiming to grasp the interconnectedness of ESG issues, and they have started to look into better understanding megatrends and risks from a backwards as well as forward-looking perspective. And this is actually something that's very exciting and very interesting to see how certain trends are actually shaping the future of not only thematic but more generally investing. And just leaving a few notes and references here again, the recent studies by Credit Suisse, Willis Towers Watson's working group that we are part of, and the CFA Institute come to the same conclusion that investors actually seek to profit from the predictability and sustainability of multi-year trends over the longer term horizon with an increasing focus on measuring that impact. And through this type of analysis that actually translates mega trends and risks into scenario analysis and ultimately into portfolio construction, they're able to do so from an active and from a passive perspective. And here, you know, we are looking at socioeconomic risks such as polarization, growing disparities between income and well-being and living standards, as well as an ever-increasing aging population. So not just only environmental risks per se. So we are finally connecting the dots between E to E plus S. And just to mention here that with this Willis Towers Watson's working group, we are launching a dedicated practical guidance report for investors in the context of active and passive investing in New York in September 2017. So please watch this space. Thank you.
Thank you, Martina. As we go into the next speaker, which is Nando van Kleeff, I'll just invite everybody to, if there's a Q&A, please use the chat box in your screen, and we'll definitely have some time after the panelists have spoken to answer some questions. Nando.
Yes, thank you, Carolien. So my name is Nando van Kleeff. I work for the Responsible Investment Department of MN, and I'll be giving an investor's perspective on the SDGs. So MN is a fiduciary manager based in The Hague. We manage the pension fund administration and investment portfolios of Dutch pension funds. Our ESG journey began in 2008 when we defined guiding principles for responsible investment, set up exclusion criteria, launched ESG integration in several asset classes, and started an active ownership program in the following years. We strive to implement ESG in all asset classes and implement ESG top-down. So where we initially focused on avoiding the negative consequences of our investments, we are currently working towards making investments that contribute to solving societal problems. And we believe the SDGs are an important tool for achieving this. So what is the role of the SDGs for this purpose, of contributing to solving societal problems? So we strongly believe that the SDGs are an important tool that will allow investors, companies, and governments to speak the same language when it comes to solving these societal challenges. When the SDG goals were launched, we never expected they would be adopted by so many different companies and investors. We see a lot of initiatives by different investors and companies, and MN itself is also working on implementing an SDG framework. So we're working on an internal framework that will allow us to assess which companies in the investment portfolio contribute to the SDGs via their products and/or services. We will scan multiple asset classes such as listed equity, corporate loans, private equity, infrastructure, and real estate. And our approach will be twofold in a sense that we will not only take a quantitative approach where we use databases to match investments with SDGs, but we will also use our internal portfolio managers' knowledge of companies we invest in to determine if these companies contribute to SDGs. So what would we like to see as investors from companies? So first of all, there needs to be sufficient granular insight in which products and services of a company contribute to the SDGs. We believe reporting in general is sufficient currently, especially in developed markets, but we encourage companies to go the extra mile and be transparent about revenue streams coming from different business lines or segments, and to explicitly demonstrate which part of the different segments have a direct link with an SDG. So for example, if you are a car manufacturer, be explicit about the revenue derived from a hybrid or EV car that you produce instead of aggregating your entire revenue into one number. What's also important for us is quantitative data. So as investors, we would like to be able to measure the impact of products and services as much as possible while taking information cost limitations into consideration. So for example, we would like to see a pharmaceutical company that has a medicine for a neglected disease. We would like them to be specific about the number of actual patients that were prescribed this medicine. I think that would give that kind of information would give us a lot of comfort into the effect of a certain product. We would also like to encourage companies to use standards as much as possible. So GRI, GEARS, or IRIS. Although at this time we don't have a preference of what companies should use, but we do believe standardization is very important. As an investor, MN is cognizant of the administrative burden and the extra costs that might exist when reporting on SDGs. We believe that more investors will be taking sustainability factors into consideration, and we therefore encourage companies to make this effort. As an investor, we would also like to encourage the data vendor industry, which supply investors like ourselves with company data, to act as an aggregator and take more sustainability data into their systems. And this data can then be used by investors such as ourselves in a cost-efficient manner to determine their exposure to SDGs. I would like to conclude with the remark that creating a framework as an investor, it's merely the first step, and the next step will be to create steering mechanisms that will allow us to influence the amount of money that we invest in SDGs. Thank you for your time.
Thanks, Nando. We have a short poll, and if everything goes technically correct, then you'll see a question popping up in your screen. The question is, what is the main obstacle for SDG investing? Can we see the results? Okay, so the poll, you'll see all the results in your screen. The main obstacle for SDG investing, two answers there are highest, which is the investors are still too focused on the financial returns, and there's a lack of information on how companies compare for their SDG contribution. Thanks for this insight. Geoffrey, up to you.
Great. Thank you, Carolien. Good morning, everyone. I'm Geoffrey Berger, partner and portfolio manager of Culture Capital. Thank you to Datamaran for inviting me to participate in the discussion today and everyone's interest in joining the webinar today. Let me begin with a brief introduction to Culture Capital. Culture Capital is a newly formed investment firm in the capital raising stage for a global sustainable equity fund based on culture. Our investment process targets companies with a sustainable culture and purpose. We invest in global equities using a data-driven process, and we use that to evaluate an organization's culture. This philosophy was built on our research and came from our beliefs that a company's culture is the key determinant of sustainable business and superior long-term returns. Culture is the core at every organization, and it defines its purpose. Purpose should be a common message at all levels, and with every employee. We see the best cultures foster an open and transparent engagement with customers, suppliers, and society. Then the transparency then builds the critical link of trust in carrying across all the stakeholders. This common trust drives careful investment in long-term sustainable capital and resources. We see that the best cultures best build brand loyalty, product innovation, and resilience of the companies see it through times of economic and industry disruption. Over the next few slides, I'll show how we use the SDGs to help Culture Capital increase transparency, communication between the company and investor. The SDGs focus on topics that historically have been low priority for most investors and company management. We've seen an increase in the reporting on these metrics by many companies. However, we'd like to see it continue to improve to give more insight to the social aspects of a company's business model and its culture. On the left, you'll see a graphic showing the difference in available ESG metrics in the social category relative to environmental and governance. It's relatively small in its availability. Social metrics also are the most difficult to measure and typically don't have a common standard on reporting. We think the continued adoption of the SDGs framework is a good way to alleviate this shortfall. From our viewpoint, social metrics are important to analyzing company's culture, and we fully support more reporting in this area. Next slide. What I'm showing here is we're using Datamaran software and the SDGs to get insight into the relative importance of these metrics across the universe of companies. On the chart on the upper right shows a mapping of the 17 SDGs in a spider chart. The chart measures the level of awareness in reporting to the SDGs for a universe of roughly 600 plus North American large cap stocks. For the majority of the companies in the universe, there's a high level of awareness of the SDGs, and that's what you see on measurement on the intensity of the spider chart. As we move to the lower left chart, however, the measurement shifts from awareness to measuring reporting on specific topics related to each SDG, evidence that there's a clear reduction from awareness to reporting. The final chart on the right measures the next level down reporting on specific issues for a topic. Again, an even further reduction. The arrows highlight SDG number 8, decent work and economic growth. And I'm going to use that as an example to kind of show what's below the next level of reporting. On the next slide. There are 19 issues that fall into the category of decent work, and the colors measure the intensity of mention and reporting, with dark green representing the highest levels. I highlighted 4 different areas, 4 different issues. The yellow boxes are around the 2 highest issues. Not surprising, these issues are easy to measure and have or may have mandated reporting. Those are issues on compensation, worker health, and safety. The topics in the orange boxes, employee satisfaction, fair remuneration, are some of the lowest. Topics that are important, however, and difficult to measure. So in conclusion, I think the SDGs provide a useful framework to enhance communication between companies and investors like ourselves. And these are typically non-financial yet sustainable aspects of a company's culture and purpose. Culture Capital, we encourage all stakeholders to use SDGs as a common language to encourage moving forward on transparent reporting of these issues. If you have any questions or interest about our research or in the fund, please contact me directly. Thank you.
Thank you, Geoffrey. And last but definitely not least, Ariel, I would like to give the floor to you.
Great, thank you, and thank you to eReValue for inviting me and for everyone for your attention. My name is Ariel Meyerstein. I'm on the corporate sustainability team with Citi. Like most companies, Citi's been doing sustainable development for a long time, obviously well before the SDGs came onto the scene. And so for us, like many companies, embracing the SDGs initially has to do, or has involved, mostly embracing the new language and new framework of the SDGs and demonstrating how it relates to a lot of our existing business activities and also philanthropic initiatives. I think going forward, we will be able to really channel that activity in a very dedicated way towards specific goals. But I think for most companies who have been early adopters in the last 2 years, most of what they've done has largely been a translation exercise of what they've already been doing, and then thinking about how they can move forward. A perfect example of this for us is our $100 billion environmental finance goal, which is actually a successor to a $50 billion goal we had launched in 2013 and then achieved, and then we re-upped for $100 billion. We're now pretty close to achieving that. So all of that was happening kind of irrespective of what the SDGs were, and they weren't even finalized at that point. But now we can very clearly say that we're, in a very demonstrable way, contributing to both Goal 7 on clean energy and also Goal 13 on climate action. And once you start really thinking about the ripple effects of that kind of a goal and the way it stimulates jobs or has other impacts in the economy, probably relates to other goals as well. Another main area that we've focused on has been decent work in economic growth, which I think is one where a number of companies can find core alignment with what they do. I won't go into all of this, but in our foundation, we've had Pathways to Progress, which is first focused on US youth, providing them with leadership training and entrepreneurship opportunities. We've now expanded that, doubled down, and looking at that globally. We've also worked with OPIC on microfinance initiatives. Another core area of focus for us is obviously investment in infrastructure. We're just beginning to scratch the surface of the global need, but we're doing our part to try and get us there. A big part of that has to do with our involvement with cities, Goal 11. We really see cities as kind of the crucible for the SDGs because of population transfer, and also the impacts of cities, the ability of cities to create jobs, but also their impact on the environment. We think that they're really going to be a key focus for everyone going forward, and a place where it's not just about Goal 11; it's really about many of the other goals intersecting in cities. Finally, partnerships, Goal 17. We've been involved in incubating and then launching and then sponsoring and moving forward a number of global partnership initiatives, including the Better Cash Alliance, the World Bank Infrastructure Facility, Sustainable Development Investment Partnership, and Convergence. And a lot of these really have to do with the practice of partnership. We're trying to create better information flow, better coordination between the public and private sectors, better deal flow, so that investors can identify where they can make their impact. And we really think that this is an important aspect of partnership, because you need to create the ecosystems and the architectures to let partnerships happen. If you can go to the next slide, please. So just a couple considerations, and some of these others on the webinar have already kind of touched upon in various ways. But for companies, we think it's really important that you think about a strategic alignment between your core business, your philanthropic efforts, and specific goals. You can, of course, try and communicate to what you're doing with respect to all the goals, but it's probably going to stretch yourself too thin and diminish the impact of where you're really able to make a unique contribution. I think for investors, as alluded to by a number of the other panelists, there's a lot of considerations to make. Do you focus only on kind of impact first investments, or do you think about your existing investments and portfolios and ways to channel more capital to companies that are demonstrating an impact in terms of their business practices, whether environmental or social? Obviously, these strategies are not mutually exclusive, but there's challenges to both. One, as alluded to earlier, we really haven't developed metrics for the SDGs for business. The targets are very high level, and the indicators that are being developed, and they're not finished being developed, are for country reporting, and a lot of them don't speak directly to business. What would be great is if there was a process through which, member states officially agreed that existing corporate reporting frameworks were deemed to be contributing to the goals. And that, I think, would galvanize a lot of even more private sector involvement. Finally, related to that, we need to have more project level transparency from all actors, whether government, development, finance, corporates, or NGOs. If we don't share more about the impacts on the ground of various activities, it's impossible to know what the impacts will be. And it's also impossible to coordinate better so that we can identify where we either have too much investment in a particular geography or a particular type of project related to a particular type of goal, or where we don't have enough. And I will stop there. Thanks.
Thank you, Ariel. So as said, we're already receiving quite some questions, and we'll definitely dive into a few of them. If there's any question, please use the chat box that you have, or the Q&A box that you have in your screen. Heike, can I ask you to spend a little bit of time on the question that we received to hear more about how these funds and bonds are structured to deliver outcomes, share risk, but also create returns for investors. Can you share a little bit, can you reflect on that question?
Sure. So basically, with any bond, you have to look at the risks, the structure, and so forth. I referenced a product that we developed, that the World Bank developed together with BNP Paribas, which was a World Bank bond. So the repayment is based on the credit risk of the World Bank. But the financial performance, so the return that investors get, depends on the performance of an index. And that index included companies that had products and services aligned in some way to the Sustainable Development Goals. And Vigeo Eiris rated the companies based on ESG factors and selected the companies that they deemed to be supporting the SDGs. And then another company, Solactive, put on financial filters to come up with the index. So in that particular case, it was a regular World Bank bond, but the return that investors get depends on the stock performance of companies in the index. But I'm sure there are others as well. So that's just one example.
Thanks, Heike. Martina, there are a few questions on the SDG index that you've mentioned, and if S&P is planning actually to develop more marketable indexes for benchmarking the SDGs. Could you spend a little bit of time on replying those questions?
Sure, with great pleasure. I mean, first of all, there are two groups of indices that we are seeing, that are making some headwinds and where we are actually focusing our efforts. The first one is actually a line of thematic indices, in the context of environmental and then social indices, and ultimately good governance, underpins the efforts across the board. Good governance and leadership, as we've outlined in our recent paper, by the way, research paper on SDGs and implications across the investment value chain, which we'll issue very shortly. So from a thematic perspective, environmental themes, like climate action, life below water, life on land, and ultimately the connectedness of E&S in the context of sustainable and smart cities. Someone has mentioned that as well a bit earlier on the call here, something that we see as key prerequisites for thematic indices. But most importantly now, we see also the transition towards social inclusion and impact, and outlined that a bit earlier in the context of an alignment and harmonization and standardization of metrics in its context as well. So here, we're focusing on gender equality, health and well-being, good jobs, and economic growth. And we have already launched a couple of indices that fall into these S brackets, but we are focusing our increasing efforts on S inclusion and impact. So that's the thematic side covered. The other index I've mentioned, that's something that we in the moment obviously keep more under wraps and confidential, because obviously it will follow in line with some of the developments that we've heard on the call, but going beyond, you know, sort of the traditional revenues linked models, for instance, where you look at products and services output towards a more greener economy. We would like to, we're aligning this with with our journey towards a greener and more social economy. And, you know, we are aiming to weight towards stocks or companies that showcase best practices. I've briefly mentioned that already, and that's all I can say. Best practices in alignment with SDGs, and hence, you know, we are trying to incentivize peers in that same sort of sector of certain companies to actually follow suit. So it's a multi-pronged approach, actually looking at building this ESG momentum as we have done over the years with, you know, best-in-class practices, for instance, in the context of the Dow Jones Sustainability Indices. But we're trying to overlay this now with a discussion around input and output and impact ultimately, and revenues-linked models. So this is actually something that's, I think, a very exciting development, and very much in line with, you know, what the United Nations Secretary General again called for, and that was at a meeting in 2012, when he said, you know, that we need a sustainable development index or a set of indicators to be developed and stipulated as an SDG framework, you know, to actually support the universal character of the framework, express a broadly agreed global strategy for sustainable development, incorporate a range of key areas that were not fully covered by the Millennium Development Goals alone. So, you know, something that's more comprehensive and that reflects the equally the economic, social, and environmental dimensions of sustainable development. By the way, these are the 3 pillars of sustainable development that were outlined multiple times and have been over the years. And, you know, that we will try to engage all stakeholders. That's another important element of that index development as well, in the development of that index, and incentivizing corporations, so hence building the gaps or closing the gaps in the investment value chain to engage on some of these issues. And ultimately, the idea is as well to follow on from where we left off. You know, I mentioned a couple of times the idea around long-term value creation. In 2016, we launched, together with the Focusing Capital on the Long-Term initiative, an index that has long-term value elements in it, that holds constituents for a minimum of 3 years based on financial and extra financial criteria. And that's also something as an idea that we are playing with now across the ESG spectrum. You know, we historically included governance data and S&P quality scores for financial metrics, but now to broaden this up in the context of ESG and SDGs, to build really vehicles that, you know, meet a couple of variety of different implications. Again, input, output, impact, revenues-linked models, long-term value creation methodologies, and provide, you know, methods for engagement across the investment value chain. So sorry for answering this at length, but I think it's important to understand that these are a multitude of efforts that we are currently undertaking to really align the goals in the context of the SDGs.
Thank you, Martina. There has been a question about the alignment between the SDGs and with the country's INDC, the Paris Agreement. Nando, could you share your thoughts about that question?
Yes, definitely. Yeah, I think it's an interesting question. I think that it all depends on what, well, from an investor perspective, I think it depends on what kind of choice you make. I could, for example, see a model where you check if a company that you invest in operates in line with a 2-degree scenario, or if it operates in line with an INDC. And if that were the case, you could, for example, label it as an SDG. That's one possibility where I see that it could work for an investor. But you could also take a more simple approach and basically, well, consider everything that invests, for example, in renewable energy, consider that to be an SDG because it contributes to lower emissions. So I think my point is that it really depends on your own preferences. And I think currently the SDGs themselves don't give enough clarity, I think, about really how they match or align with the INDC, but it's really something that every party probably has to define for itself, or an overarching committee maybe could do that. But yeah, I think there are different approaches, but it would be possible.
Thanks for that. There were some comments and questions about blended finance as well. And I think, Ariel, can you share with us your thoughts about blended finance?
Yeah, sure. I'd be happy to. I mean, for Citi, we really think that, as alluded to, there's this tremendous funding gap. And obviously, a lot of this is, pure guesswork when you start thinking about the way the SDGs are structured as a framework, 17 goals, 169 targets that all relate to one another, cause and contribute to one another. The numbers are, I think, general and approximations. So we have to bear that in mind. But we do know that we are not dedicating enough resources, particularly to least developed countries. And most of that has to do with investors being very wary of investing in some of those environments. So for Citi, we think it's really important that we use more blended finance. And for us, that means development finance institutions, official development partners, donors, using their current levels of official development assistance more efficiently, and using that to de-risk investment in least developed countries and other developing markets, so that you can crowd in more private capital. And we've seen this work really well in a number of situations. One, in terms of microfinance, we've been involved with the Grameen Foundation. The existence of donor pledges and guarantees unlocked 4 times the amount of finance that would have otherwise been involved. And there are other benefits as well, because you had fundamental changes in the marketplace. So local currency lending reduced the foreign exchange risk for banks, because local banks were doing the lending to microfinance organizations. That also gradually changed for the foreign private investors, the perception, the perceived risks of being involved with those actors in those countries. And so all of that kind of generated momentum and marshaled private capital, which otherwise would have been kind of sitting on the sidelines. So we think it's an important area to kind of keep focusing on. And I think the public sector just has to get more and more comfortable with leveraging their money to involve private capital, as opposed to insisting that the public money, donor assistance, goes directly to specific projects.
Thank you, Ariel. Geoffrey, in your slides you showed some graphics and some analytics. Could you share your thoughts about how companies can use data analytics, for example, to help with aligning internal business issues with the SDGs? Is it something that you can share your thoughts about?
Gladly. I think it's a combination of using data providers to help communicate what the companies want to, as a mechanism to bridge that gap between investors and companies, as Nando mentioned in his comments, that investors typically can be very data driven, want to have independent sourcing of that data, and so data providers can help facilitate with that. Then I think from our perspective, Culture Capital, the company is really just taking a look at what they're trying to do long term with their organization and their products and services, and how that interacts with all stakeholders is the areas that can really help promote that continued conversation. So that if they just begin with the areas that are most relevant to their organization and what they would like to achieve as outcomes. And a lot of companies are doing these things already internally. They're just not openly communicating those things. I think that's a really good first step to continue to foster that conversation, not to be forced into some framework that maybe doesn't, the forcing of things is not the way to approach this. It's really the openness and transparency on the areas that the companies are already doing, and really highlight those and communicate those. And that gives us as investors both the transparency to see what they're doing, but also provides a platform for communication on further work, how that goes forward on the topics.
Thank you, Geoffrey. Martina, just to come back to you for a little while, how can the international corporate and financial community finally grasp that all is connected? There was one great question as well about what we can all do with the participants and panelists as we are here now to get this moving forward. So can you mention something about that?
Sure, with great pleasure, Carolien. So what we have seen, what I outlined a bit earlier, and other participants on the call, is really, standing for this big move, the convergence of goals, and ultimately the alignment of cross-border multi-stakeholder initiatives. I think this is really what we classify as this so-called new paradigm. And we see, that this has happened really in the context of climate and development finance. I mentioned the Paris Agreement as examples, or the Addis Ababa Action Agenda in 2015 here for the Sustainable Development Finance Agenda. And what's really happened now, and I outlined that as well a bit earlier, is convergence around the goals between and amongst, public policy makers, corporations, and investors. There's a clear understanding that there's a need for joint action, and ultimately what's happened as well over the last few months, and this is helping the effort, is there's more clarity and transparency around goals, targets and synergies, and ultimately metrics for sustainable development. And most recently, I think the International Council for Science came up with an interesting guide here. I'm encouraging everyone to read it, to translate the SDGs into reality and to quantify SDG synergies, but also SDG conflicts. Someone mentioned maybe not all of the goals per se are investable, some of them are aspirational goals. And, this actually guidance, or this report, looks exactly at these type of synergies and conflicts. And ultimately, it also finds that there are fundamentally no incompatibilities between the goals. So everything is literally interconnected. And we are seeing that as well in the context of where the market is moving. Someone also mentioned a bit earlier the harmonization of standards and metrics. I mentioned the positive impact principles by UNEP and ultimately the manifesto that was launched in 2016. But I think most importantly, there's also an alignment around and across the value chain here around mandating for more disclosure of non-financial information and ultimately diversity. There's an EU directive now that's coming into play, 2014-95, I think it's called. An alignment around how stock exchanges as well are looking at the spectrum and at listing requirements for ESG and ESG disclosure in line with integrated reporting frameworks. And not to forget, right, we haven't mentioned these yet, but they also play a pivotal role in supporting this harmonization effort. And then we have seen, that certain initiatives, impact reporting initiatives and frameworks have also started to align with the SDG goals and look at corporate reporting through an SDG lens. Here, the Global Impact Investment Network, for instance, or UN Global Compact and the Global Reporting Initiative have all actually joined forces and released SDG-related guidance for businesses. And I understand that even the upcoming Natural Capital Coalition and their protocol is in alignment with the SDG goals overall. So that actually shows to me that, we're seeing an increasing sustainability framework alignment and that we're seeing a new way towards a holistic systems approach, as it's been called for, a universal agenda by the SDG Synthesis report that was launched in 2015 by the UN. And ultimately, I think this will finally bring some positive action on all the 17 SDG goals and opportunities for investors as well as businesses. And you mentioned that, Carolien, not only at board level, but within the C-suite and hopefully and ideally amongst middle management, because ultimately that's where change happens, that's where implementation happens, and we need to see more of it.
Thank you, Martina. And I think that's actually a very great final comment to end this Q&A. I'm well aware that we haven't answered all of the questions that were asked, and there were some great questions amongst all the questions. So what we'll do, we'll try to refer to you on a later stage. We will end with the contact details, how you can connect with us and we'll do our best to actually answer some of the questions at a later point in time. Can I have the next slide? With the panelists and myself, we would at least give you our 3 highlights of not only this discussion, but also in preparation to this discussion. And we came to at least 3 main messages that we want to, well, tell you and at least let it go forward. It's important to start by requesting. Investors can help to promote the SDG adaptation by demanding, but more importantly, first start requesting more transparency on the SDG contribution. It needs to be a dialogue. We cannot change the world in one day. So I think the main message is to start requesting. Align where possible is one of the other main messages that we want to give to you. It would be great to have as much alignment as possible. But then again, we know that a lot of companies and a lot of funds as well are dealing with those topics in a different way for many years. So where alignment is possible, please align. And at the same time, keep in mind that probably not everything can be aligned as quickly as we want to. Focus on materiality. For companies, it is so important to make sure that they know their material issues and that from that point on, they can link it to relevant SDGs. It's going to have a bigger impact if companies start to focus on their material issues and use that perspective to align with the Sustainable Development Goals. Once they do that, once you know your material issues, you can also start reporting consistently about the activities, but more importantly, about the impacts you actually have. As it will be 5 o'clock in about 1 minute, we want to thank you for your participation. We hope you've enjoyed the conversation. We want to thank our panelists again for their preparation and their participation. And we hope to see you in one of our webinars going forward. Thank you.